Well, big Japanese companies are set to agree to raise wages this afternoon for a fifth year, but will likely stop short of meeting Prime Minister Shinzo Abe's 3% goal, which again adds to doubts that the central bank will be able to hit its consumer price target. So while inflation is still proving elusive in Japan, data is quite strong. The economy expanding more than initially estimated in the last quarter of 2017, thanks to an upward revision of capital expenditure and inventory data, confirming the longest run of growth in 28 years. Well, for more on Japan and potentially opportunities there, Morphic Managing Director Jack Lowenstein joining me live from our Sydney CBD studio. So, Jack, welcome to the program and welcome back to Australia. I understand you've just returned from Japan.
I did, from unseasonably pleasant weather.
Oh, well, that's wonderful. Jack, tell us, what are your impressions of the Japanese economy? Because, of course, you know, what we read in black and white and what's actually happening on the street sometimes can be quite different things.
Well, the biggest problem is I spent most of my time in Tokyo. Now, Tokyo has never been in recession. Tokyo has been growing steadily, both in population terms and GDP, somewhat at the expense of the rest of the country. So, and Tokyo gets to be is a more and more beautiful city every time you go there. But having said that, the mood is upbeat. Japanese people have been trained to be pessimistic for the last 30 years. They're slowly losing the habit, so it's very good.
Okay, and when you talk about the strength then being concentrated in some areas, Tokyo in particular, I mean, if it's becoming a more beautiful city every time you go there, you must think that there's lots of building going on, perhaps even lots of preparation for the Tokyo Olympics. Is that true?
It is the Tokyo Olympics in part, but there's a lot more than that. Central Tokyo is being redeveloped because earthquake codes have changed. That means that you can build much taller buildings safely, and there's a lot of very old buildings at 7 or 8 stories high that are being ripped out and 60-story buildings put in their place. Beautiful buildings, I should say, with lots of space around them. And so there's an ongoing construction boom that I think will go on for many years, because the Olympics boom is soaking up all the manpower resource, all subcontractors, and so a lot of other stuff that wants to go can't go until the Olympics boom is completed. But there won't be a drop-off after the Olympics.
Okay, so you'll have this pipeline of work that's waiting to be done to replace that activity brought on by the Olympics. So, Jack, the question is, are you investing in what? Construction companies? Are you investing in financiers? How do you play that story?
Well, we're investing in housing developers and construction companies. The good housing developer companies there are very cheap still, on sort of 12 times P for the really good ones. You pay less for the bad ones, of course, but they're going to grow at 20–25% a year for the next 3 or 4 years, so we're very happy to do that. Open House is a stock we've owned for about 5 years. It's up about 6-fold in that time, and it's still very cheap, we think.
Okay, so if you're looking at opportunities in Japan elsewhere outside of that construction story, I mean, do you try to leverage to the consumer, which we've just heard we'll see wages increasing once again if big companies in Japan come to the party?
Look, I think the interesting thing about the consumers is that retail has been dead in Japan as a whole, as taking the whole of retail for quite a few years. But what's really interesting is that parts of retail have done very well, and we've been investing in those things like drugstore chains, which have stolen market share from other formats such as supermarkets, because drugstores in Japan sell food and even fresh food. But what we see now is an insane overbuild. So these companies are all overcapitalized like crazy, and some of them want to now expand their store network by a factor of 3 over the next few years. They're all cash to the gills, as I said, so they can afford to do it, but margins are going to get killed. And meanwhile, the Japanese population as a whole, particularly in suburban and semi-rural areas, is falling. So we see a bloodbath there. And when we bought these stocks, we were buying them on sort of 15 times P with maybe 10 to 15% earnings growth. Now they're going to go into very low sales growth, no profit growth, and they're trading on 25 times P. So we're now shorting some of those. Mm-hmm. And we think there's going to be a realization that these very highly valued stocks have gone X growth, and that's looming around the corner.
Okay. Now, I'm curious to get your thoughts on how the mood is in Japan in the wake of the talk coming through from Donald Trump about tariffs, and now, we've got the Nikkei snapping a 4-day winning streak today on the news that there might be more significant tariffs imposed on China. I mean, how sensitive is that issue there?
Look, there was a lot of discussion about it when I was up in Japan. I think the major focus there was on specialty steels. So Japan makes lots of very, very high-tech steels, which are needed by the Japanese the American automotive industry. So it was really felt by the Japanese, why are they cutting their nose off to spite their face? But I think that overall, the Japanese are very supportive of efforts to rein in an overreaching China, and they know they're not the target. And they also know that Trump is quite willing to do things that are outside the normal playbook to make sure that the ultimate effects of what he's doing are very targeted at the enemy, as he sees it, being China, and not at Japan or Australia, who he sees as his allies.
Now, I'm curious to just get your thoughts as well. I know it's not a political cross, but we've got these accusations of cronyism going on in the Abe government, particularly relating to the Prime Minister and his finance minister. I mean, does that have the potential to really upset some of the positivity that you're starting to see coming through in Japanese business?
I can see why you might ask that question. So the background to the story is that the Prime Minister's wife was very close to a slightly nutty ultra-nationalist school entrepreneur, and somehow or another that chap ended up with a piece of very cheap land, and it looks like the Ministry of Finance was involved in approving what was really a below-market sale. So it stinks to high heaven, to be honest. But the good news, I think, from our point of view, and I think probably from Japan's as well, is that there's enough greyness about who knew what when, who did what when, that it might just reach as far as the finance minister, Mr. Aso, but it won't go as far as the Prime Minister, Mr. Abe. I think nobody really believes that there's any clean hands here, but I think nobody wants to see it escalate out of control.
So no reason to avoid Japan. Jack Lowenstein, Morphic Asset Management, wonderful to have you in as always.
Nice to be here. Bye-bye.